How you doing? I'm John Ruma with the World Market Media Research Team. This morning, investors are zeroing in on retail sales numbers. With retail sales lower than expected, many are casting doubts on how strong the economic recovery will be. The May reading of retail sales was much worse than the forecast, down 1.2% on a month-to-month basis overall, and sales ex-auto were lower by 1.1%. That is the weakest headline figure since last September, and the weakest for the ex-autos component since March 2009. Less people trading on this sport-filled Friday, paired with worries of economic growth, could equate to a rough day on Wall Street. Currently, markets are pointing down about 0.5% across the board, with oil trading at $7.45, down $1.03. Gold continues to be wild this week, trading up $2.20 at $1,223. In Eurozone news, traders continue to worry about contagion from our neighbors to the east. Spain went on record today reiterating that they never have and never will ask for aid from the European Union. Although the country has its banking problems, they are not preparing for a bailout like their neighbors Greece. This statement is encouraging, yet market participants remain pessimistic upon past precedent for the EU. Honda's exhaust pipe factory workers are still on strike, with more and more laborers catching on to the beat. Now calling for unions, workers continue to voice their demands for better working conditions and higher labor. The Communist Party has attempted to suppress such actions of protest, but it is only a matter of time before China's gigantic working population decides to stand up for themselves. In other news, the FBI is beginning its investigation of the AT&T iPad security breach, which we will investigate further later in the day. The first World Cup match begins this morning with South Africa versus Mexico at 10 a.m. Eastern Standard Time. World Market Media will not be distracted at all by these matches and will have laser focus on the U.S. market and our small cap news. Thank you. That's all we have for you for the research department today.